This is where it all begins. Not with a mountain of cash, not with some magic formula, but with one single property and a decision. Everyone loves to talk about getting rich in real estate, but they sell you a dream and forget to give you the map. They show you the destination, the gleaming skyscraper, the massive portfolio, but they conveniently leave out the treacherous roads and the sheer grit it takes to travel them. Today, I'm giving you the map. We're going to break down the actual path the world's real estate titans took. This isn't another get-rich-quick fantasy. This is the blueprint. It's a 4-stage evolution, from your very first deal to a billion-dollar empire. And you're going to want to stick around because the real leap, the move that separates the millionaires from the future billionaires, happens in stage 3, and most investors don't even know it exists. Section 1. The reality check and AMP, the foundation. All right, before we dive in, let's have a reality check. Becoming a billionaire in any field, let alone real estate, is incredibly rare. It takes decades of relentless work, aggressive scaling, and a mindset that doesn't just tolerate chaos, but thrives in it. A significant chunk of the world's billionaires built their fortunes on real estate, but they didn't do it overnight. They did it over a lifetime. So this isn't about becoming a billionaire tomorrow. It's about following the principles that built their empires, so you can build your own version of financial freedom. This journey starts with phase 1, the foundation. This is your path from zero to your first handful of properties, building a net worth into the hundreds of thousands. Honestly, this is the most important phase because it's where you build your skills, your credibility, and your confidence. Forget billion-dollar deals for now. Your entire world should revolve around 2 things: cash flow and building a track record. First, you have to speak the language. You must get comfortable with concepts like cash flow, net operating income, NOI, cap rate, and leverage. Think of it this way. Cash flow is what's left in your pocket after every bill is paid. NOI is your property's income before the mortgage. The cap rate tells you how hard the asset itself is working, without any debt. And leverage, well, leverage is the double-edged sword that can make you rich or make you broke. It's using the bank's money to control a much larger asset. The titans master it. You need to respect it. Next, adopt the right mindset. This isn't a hobby. From day 1, you are the founder and CEO of Your Name, Inc., a real estate investment firm, even if it only owns one little duplex. You have to get obsessed with the numbers, and most importantly, protecting your downside. The legendary real estate billionaire Sam Zell, known as the grave dancer for buying assets when markets were crashing, always started by asking, "How can I get hurt?" He knew the good times take care of themselves. Surviving the bad times is what matters. Then, you pick your starting lane. Most titans start small. Don't try to buy an office building if you don't know how to screen a tenant. The classic entry points are simple residential properties. You could buy a single-family rental or a small multifamily like a duplex or a fourplex. These are easier to finance and manage. An even smarter play is house hacking, where you live in one unit of a multi-unit property and rent out the others. This strategy lets you use low down payment, owner-occupied loans to get in the game with very little of your own cash. Finally, you do the first deal. It's going to be terrifying, but you have to be decisive. Do your homework, get an inspection, run the numbers conservatively, and assume things will go wrong. If it still makes positive cash flow from day 1, you pull the trigger. That first property is the cornerstone of everything. Section 2. The professional investor, scaling to millions. Once you've got that first property humming along, you enter phase 2, the professional investor. This is where you scale from one property to a multi-million-dollar portfolio. Your goal isn't just to buy another property, it's to build a machine that acquires properties for you. This is how you turn one door into 2, 2 into 10, and 10 into dozens. The key here is systematization and recycling your capital. The most famous strategy for this is the BAR method. Buy, rehab, rent, refinance, repeat. You hunt for a distressed property below market value. You renovate it to force appreciation. You place a great tenant to get the cash flowing, and then you go back to a lender for a refinance based on the new, higher value. Now, here's the crucial part. If you executed well and the market is on your side, you can often pull out a large chunk, sometimes all, of your original investment. Because it's a loan, it's tax-free. You then take that same stack of cash and repeat the process. This is how you scale without spending years saving up for new down payments. But be warned, this increases your leverage and your risk. It's a powerful tool, not a magic trick. During this phase, you have to evolve from a solo act to a team leader. Real estate at scale is a team sport. You need an investor-focused agent, a great mortgage broker, a sharp real estate attorney, a reliable contractor, and a CPA who gets real estate. Trying to wear all the hats is the fastest way to stay small. You also get strategic about where you buy. Billionaires don't throw darts at a map. They follow the data. They look for two things above all else: population growth and job growth. More people and more jobs create more demand for housing. That means rising rents and property values. You follow the money, investing in markets with strong, diverse economies. You're not just buying a good building. You're buying in a market that will act as a tailwind for your entire portfolio. CTA mid-roll. If you're getting value from this roadmap, do me a favor and hit that subscribe button. We're about to get into the most critical part of this journey, the massive leap that separates the millionaires from the people who end up on magazine covers. Section 3, the leap to institutional scale. This is phase 3, the quantum leap from being a successful investor to becoming an institutional force. Your net worth climbs from the low millions into the tens and even hundreds of millions. This is where you go from playing checkers to playing 3D chess. This is where the titans truly forge their legends. The fundamental shift is this: you stop buying houses and start buying assets. You pivot into high-impact commercial real estate. We're talking large-scale apartment complexes, industrial parks, office towers, and shopping centers. A single-family home might make you a few $100s a month. A 200-unit apartment building can generate tens or hundreds of thousands. This is also where the ultra-wealthy use a strategy most people never see: land banking. Titans like Donald Bren, who controls a staggering portfolio of over 129 million square feet of property plus vast land holdings, didn't just buy buildings, they bought the future. They acquire thousands of acres in the path of growth, work to get the zoning changed for development, and then either build master-planned communities or sell the entitled land to builders for an enormous profit. They don't wait for appreciation, they manufacture it. But how on earth do you afford a 200-unit building or 1,000 acres of land? You don't. At least, not with your own money. This is the second critical shift. You master raising capital. You learn how to structure deals and bring in outside investors through syndications and joint ventures. You partner with high-net-worth individuals, family offices, and institutional funds to acquire assets far larger than you could ever control alone. Your track record from Phase 2 is your resume. It gives investors the confidence to write the big checks. You're no longer just an investor, you're a capital allocator and a deal maker. This leap, from small residential to large-scale commercial, and from your own cash to other people's money, is the single biggest accelerator on the path to a billion-dollar portfolio. Section 4, the Empire Builder. Phase 4 is the final form, the Empire Builder. Here, you're no longer just doing deals, you're building a platform. You aren't just buying assets, you're running a full-fledged development company, a private equity fund, or a real estate investment trust. REIT. Sam Zell did this masterfully, creating giants like Equity Residential. His company wasn't just him anymore. It was an institution that could acquire, manage, and sell billions in real estate on its own. At this level, your focus shifts again. You become a master of market cycles. A huge portion of real estate fortunes were made by being greedy when others were fearful. During the crash of the mid-1970s, Sam Zell went on a buying spree, acquiring on the order of $3 to $4 billion in property when asset prices had plummeted and others were panicking. Jeff Green became a billionaire during the 2008 crisis by first betting against subprime mortgages and then using that massive windfall to scoop up distressed real estate at bargain bin prices. They have the cash and the conviction to buy when there's blood in the streets, knowing that's when the best deals are found. Tax strategy also becomes a massive profit driver. You use every advantage the tax code gives you, like depreciation, to shield cash flow. You use sophisticated legal structures to protect your assets and optimize your tax position. This isn't about tax evasion. It's about playing the game by the rules, which are written to favor those who own and develop real assets, and using them to compound wealth at a blistering pace. Conclusion and AMP, mindset recap. So, what's the actual path? It's 4 distinct stages. Phase 1 is about getting educated and landing your first deal. Phase 2 is about scaling that into a residential portfolio with systems and a team. Phase 3 is the great leap, pivoting to large commercial deals by raising outside capital. And Phase 4 is about building an institution and mastering the art of the market cycle. But underneath it all is a specific mindset. It's an insane, long-term focus, thinking in decades, not quarters. It's an unshakable belief in hard assets. It's the emotional discipline to stay logical and calm during a crisis when everyone else is freaking out. And it's a relentless, humbling commitment to always be learning. This is the map. This is the blueprint from a single front door to a billion-dollar empire. The destination isn't guaranteed, but the path is proven. It's not easy, but it is real. Now, it's your move.